All right, hello everyone, and welcome back to another episode of the Wealth Building for Dummies podcast. My name is Kyle Demian. I'm joined here with Renji Matthew, as always, and then today we do have a special guest. We brought in Amy Mauk with Titanium Capital Solutions. And Amy, number one, thank you so much for taking some time to be on our podcast here and to share with what we're going to talk about today. And Renji, why don't you actually give us a little bit of an introduction for Amy and toss it over to her so she can share her story with us.
Yeah, guys, I'm so excited to have Amy here. It was a great partnership. It was a privilege to have met her last year because she's going to talk about a lot of things that she's going to talk about here is stuff people need to know about. Because especially if you're struggling with funding, getting funding for your business, and especially if you have horrible credit, which I did before, and learning how to clean that up and be able to get funding to grow your business. Because a lot of people that have great business ideas, they just don't have the money to get started. And Amy here is going to show us how to do that. She's got vast knowledge on all things credit. So I'm excited to have you, Amy. Thank you so much for being here. Let's go right into it. Tell us about your background, how you got into the entrepreneurial journey you're in, and where you are now.
Wow. Okay. Well, awesome. First of all, I want to just give it right back to both of you guys, Renji, Kyle. You guys, thank you both for having me here and being so thoughtful to actually bring me on and speak about this because I do, have a lot of passion behind this and helping people. And I know that it's, a way and an avenue that can help people. And a lot of people just don't know. And that's what I have learned through the process. And even myself, I didn't know this stuff, growing up. We weren't taught this as children and as kids. And you don't know these things unless you are, just around somebody that knows it or, they don't teach it in school. So I really appreciate you guys having me here. And just a little bit about myself and my background. I actually grew up in Indiana on a farm. So I started at a young age being very disciplined as far as having to start work. I've always been very competitive. I'm a very competitive girl at nature. Or person, I guess you could say. But when I say competitive, I was, the one that was knocking down the doors to sell the most pizzas in high school. So, when I started, I left school and I went to college and I moved away from home when I was 18 and started just working and getting myself into a better position. And so I started working like 2 jobs, going to college at the same time and got my insurance license at 21 and started getting into the entrepreneurship world a little bit, although I was working for an agency at the time. Bought my first house when I was 23 and just had to really start figuring it out. But I was very motivated and highly just wanting that. I had that desire to win and to be the best that I could be. And so I was always striving for that. And so those aspirations, I was working at a gas station. I was going to college. I was bartending. I was doing all the things to make it go. And then I started venturing out into just dabbling into different ventures like affiliate marketing. I started getting into the sales world, which I was always been a natural seller. So sales became easy. And I've done hired lots of mentors and, paid thousands and thousands of dollars on self-development and going to different programs and learning sales to get better and better at it, which, resulted in, top performance and being able to lead and help a lot of people with that. And so I then started working. We moved after college, moved to, I'm going to fast forward quite a bit because there was a lot of time there that I was in Ohio, but we're going to fast forward that and we're going to get to when I moved to Nashville about in 2012 and started working for the Yellow Pages. Now, mind you, I was working for a radio station in Lima, Ohio. And that was very rewarding. We did a lot of remotes and I went out and, was working with a lot of business owners. And so my background has been in marketing and advertising and sales and insurance and all that. Right. So when we knew we had to, get on out of there, the kids were growing up and we didn't want to have them growing up there. So we moved to Nashville. And so when we moved to Nashville, I dropped everything that I was doing. I just quit all of it and said, we got to move. And so we just up and left. So it took about 2 months, got planted, and started working at the Yellow Pages. Now, Yellow Pages is corporate America, right? So I'm used to corporate America. I have been working in corporate America for several years now. I had climbed the corporate ladder, gone all the way up into management. And, of course, it was great. But the thing that I always hated about it was the time constraints, not being able to work for yourself. You're working for somebody else. They're telling you what you can and what you can't do, changing the rules whenever they want, changing their comp plan. And so that's what I was experiencing with Yellow Pages. As you go, I was first of all selling this yellow book, right? And if you all remember the Yellow Pages, it's online now. So, but we were doing the online a little bit. Anyways, I was like, okay, I got to find something else. So that's when I decided to go out, and I got introduced to a company that was selling health insurance. And I had done insurance before when I was 21, working for an agency, and I never really wanted to go back into insurance, to be honest. Like, I don't know too many people that are like, I want to grow up and be a health insurance agent or a life insurance agent or an insurance agent of any matter, right? You don't just grow up thinking that, at least not in my experience. Yeah. But
no,
that was
many
not
people.
That was not my experience either. So however, to me, it seemed like a really enormous, it seemed like a great opportunity. And I knew that when I was going to be working for myself, because when you're in insurance, ultimately you are working for yourself. You're appointed with carriers and you're able to sell their products, but you are working for yourself. And so although I was making over $100,000 a year at Yellow Pages, I still had that burning desire where I had to go and get out of that corporate America mindset. I needed to do something bigger and better, right? So that's where it started. I said, okay, let me go ahead and start. So I started with this health insurance company. And it took me about, 3 to 6 months of figuring it out, and then rapidly started excelling. I started selling major policies. I became a top agent in the company. I was the first female to hit $1 million in the first year that I was there. I started rapidly, after about 7 months, started recruiting and started bringing folks into insurance and then teaching them the skills. I wrote and developed and rewrote basically my whole script, my whole plan, and then started teaching other people how to do that. And I found a lot of reward in that, and a lot of that was a lot of fulfillment for me. I've always loved helping other people, and I'm a big believer when you help enough other people get what they want, you're going to get what you want in return. And so it came easy to me when, I could recruit these agents, and I would just let them watch what I was doing. Just sit down. Let me show you how to do it. Here's the phone, call. All right, here's how we're going to close this deal. And they were like, oh my gosh, I can't believe you just, I'm like, no problem. Here's a script. Let's go. And so I ended up being a top recruiter in the company. We soared our team over to about, I had recruited over 4,000 people in the time that I was there in about 8 years. We scaled to 150 million in written business. My first 4 years, within the first 4 years, I legitimately then became a millionaire. I think my fourth year, I was over 3 million in my own personal revenue from what we had done collectively as the team. And so that was a journey, and it was an amazing journey. And I learned a lot through that. And that was all entrepreneurship, right? Mm-hmm. So from there, you have your ups and downs whenever you're in entrepreneurship, and from there, I kind of went and had that 2x4 that you're unexpectedly, you don't think things can happen. Your things are great. You're doing everything you're supposed to do. At least you think you are. But you don't really know what's going on around you, right? When I had 5 offices here in Nashville, I had a team of 200 people writing at any one point. I think at this time I had probably 150 people that were actively on the team. And I just didn't, you don't know who's for you and who's against you, right? And the mentor and the person that I trusted the most ended up being the person that I couldn't trust. And I didn't know that. I didn't know that. You just didn't know what you didn't know. And so anyways, things happen. 2x4 hits me, and all of a sudden, in the blink of an eye, it was gone. It took it from me, all of it, and said, you are, this, and that. And then I had to part ways. So when that happened, that changed, that was one of those times in your life when you're like, oh my gosh, what do you do now? Right.
Mhm.
So I had a non-compete. I was not able to go back into insurance. I was not allowed to speak to anybody from my team. So that was my whole entire life. So I was like,
Mhm.
okay, what am I going to do now? So I started doing research, and I knew lending was a great space to get into. And I had done some others that made a lot of money in the industry. And so that's where it started. I knew I didn't want to go back to corporate America. I didn't want to work for anybody else. I'm too ambitious and too no, I can make this shit happen myself. Pardon my
Mhm.
language. But
Yeah.
so
Well, before we go any further, I think
yeah,
you dropped a lot of knowledge there. Like, there was a couple of things that I don't want to just run over, So one of the first things you mentioned, which we talk about a lot on this podcast, is mentorship. You were not, scared to spend money on mentorship, because I'm sure a lot of the stuff that you learned there is what helped you get to the top producers. And when stuff happened, even when the 2x4 hit you, you were able to pick yourself up and go right back into something, instead of being like, oh, this happened, I can't do this again. And because that's what happens with a lot of people.
yeah,
But all that mindset that you worked on, it prepared you for whatever happened, even if you didn't see it coming. Right. So that's something I think is really important that a lot of people don't think about, because stuff is going to happen. We can't always trust people. Even your closest friends might not be. We are human. People make
mhm,
mistakes, and even if you trusted someone, it doesn't mean they always reciprocate, right? So there's
exactly.
always stuff that will happen, but that mindset being strong is what helps people get over that stuff. And then something else you mentioned about having that yearning to get out of being a employee and being your own business owner. I think a lot of people have that want to be your own boss, want to be your own a business owner, but not most people don't take action. You took action, and then, like you said, it took you 6 months or so to figure things out. You weren't scared to figure things out. That's another thing a lot of people take for granted, is like, oh, I tried it for 2 weeks, it's not working, it's not for me. 2 weeks. It took you a lot longer to learn how to walk. Like it's
Yeah.
gonna take you a lot longer to figure anything you're in. And I think something we've heard a lot of our mentors talk about, you want to give everything a try for 6 months to a year before you move on, because after a year you'll know for sure if this is going to be for you or not. But most people are not willing to try it for that long. And a lot of times it might be their surroundings, that they weren't working on their mindset, because mindset's important in that too. In that year you're going to struggle a lot. So if you weren't working on yourself and your mindset, you're not going to stick around for that year. So there was a lot of things that you covered that I think a lot of times we just gloss over and don't think about, but those are all really big, important things, because I'm sure that's what got you where you are now. And even now, if another 2x4 comes, what you can do next. Your mindset. You're able to take the action, take the steps to get to be successful in another industry if that's what you have to do. So,
Mhm.
anything you want to add there, Kyle, or questions or anything?
No, you covered it all very, very well. It's like a lot of business principles that you touched on, and I've come to find out we all, if you're in business, you're in sales, especially insurance, a lot of stuff, a lot of business development happens there. And the biggest thing that you touched on there at the very end is that like you had to reinvent yourself. And that kind of gets us to where you're at today, with Titanium Capital Solutions. So let's talk about like more about what it is that you're doing now and how you can help. Uh, is there only certain people you can help, or like kind of define what it is that you do and who you can help and how you can help them, grow
Yes.
and scale a business or whatever it is.
Yeah. So that's perfect. So yes, and that's exactly where I was getting into. And you're exactly right, Reggie, on mindset. And that is one of the big things, you teach people when you're coming in, especially getting started in the industry and to recruit and help so many people. The first thing you have to start with is your mindset. So I would always turn people on to certain books right off the bat that you have to start reading, because to get anybody over that hump to get started in the insurance industry, as you know, is very difficult. So I totally agree with
What
you.
would those
All of
books be? Let's talk about them just for a few
that.
seconds. But
Well, the first one was Sell or Be Sold. Like if you're getting into sales, Sell or Be Sold is like a must. Just read it. It's a simple book,
yeah,
but it's really a really good one. We were focused on closing a lot, so we did a lot of the Grant Cardone studies. I had a lot of my, I had another leader on my team who was a Grant Cardone like trainer, so it was pretty awesome to have him. He was,
That's cool.
yeah, him. I mean, teamwork makes the dream work, and it wasn't just myself who did our team. By the way, guys, I had amazing leaders that I had recruited and built up that helped along the way. So, but yeah, Closer's Survival Guide is another really good one. Everybody should be millionaires. So mine's a lot of mindset stuff. There's a whole slew of them. I had a list of them that I would be like, you guys need to read these books.
That's cool. Well, that's
Yeah.
another thing you hit on there that, like, you talked about you had to build up leaders. It wasn't all on you, right? And that's something I think I forget sometimes too, because you're trying to do everything by yourself. That's not going to last that long. You're going to burn yourself down, so you have to build up leaders and trust that you led them the right way. Now they can take it from there. So that's another great point you brought up too.
Yeah. And so all of that led me to, okay, what am I doing next, right? So then I started Titanium Capital Solutions, which is where we're at today, but I'll give you a little bit of backstory. When I started with Titanium, I really didn't know anything about the lending space other than, you could get money somehow. I had a good credit score. My score was good. I had great credit mix and I had done a great job with that. And so that was good. Then I started Titanium Capital Solutions and I hire mentors. First of all, I'm starting a new industry. So what do? I went out and I found the best person, Jansen Fugate, the best person in the loan broker world. And I hired him to be my coach. And he was my mentor. And I worked with him one-on-one. And he taught me everything about building out the business credit, the different types of lending that are available, along with studying. He wasn't the only mentor. I had multiple, but he really helped me a lot. And so I still work with him till to this day. I can call him call him all the time. So again, it comes back to making sure that you have the skills and the knowledge. So through the process, we can help anybody. I didn't initially start out in the credit repair space per se. Okay. I personally did not want to get into credit repair, although I knew that it was really important. I know you have to have credit to be able to get lending, but I'm more focused on the business credit and building out business credit and then funding folks based off their business credit being built properly. So we would structure the business, add on trade lines, and I can get into all of this, but we added trade lines onto the companies. And then we would have the companies built enough that where you could go to the bank and you can now apply for an actual line of credit or a term loan, or we could do an SBA. And then I got into commercial real estate as well. So I started doing a lot of commercial real estate loans, which I still do a lot of those yet today. So I do a lot of fix and flip, ground up construction. And so it's progressed through all of it.
For our listeners, can you define what trade line means and all that?
Yeah. So a trade line actually is as simply as anything that's reporting to your credit. A trade line is a credit card, a car payment, a house payment, a loan. That's a trade line. And so you can actually buy trade lines from other people. You can be added on as authorized users. In the world of business credit, though, you can actually purchase primary trade lines, which means that it's attached to your business as a trade line that you own, your company owned, right? Now, you got to be careful when you don't want to just go out and buy trade lines from anybody because they might not report, they're probably not real. So you don't just want to go out and be like, oh, here's one, push a button and buy it. No, you need to know your sources. And so thankfully, through all my connections and the thousands and millions of, well, not millions yet, but thousands of dollars that I've spent on mentors, I've got great connections that we have the main guy who helps us with setting up these trade lines on businesses. And then it helps us kind of really stabilize that company, because now if you add, let's say a $100,000 trade line, right, their range anywhere from $50,000 all the way to $500,000 that appears as a loan that you attach to your company that gives your company strength. So It makes it appear, that it's had loans in the past in the eyes of the financial industries, right? So the banks and stuff. So they're going to look at your business credit. What has this business done in the past? Oh, well, we see that they've had a $200,000 loan in the past, and that's paid all the way down. Now it's only got a $50,000 balance. They've had 2 years of good payment history on that. Good. We trust this. We trust this business. It makes you trustable, basically. Okay. And so that's what a trade line is. And it goes the same for personal credit. You can also do the same thing on personal credit. On personal credit, you can get primary trade lines as well. It's a little bit trickier to do that. You can also get authorized user trade lines where you can borrow somebody else's. The way you look at it, you borrow somebody else's. You just, like your mom, for example. And this is a really good tip for your kids. You can start building their credit right now. If you have good credit and you have available credit cards that have high limits with low utilization, add your children onto those cards now, because by the time they're 18, now they're going to come out of 18, they're going to have a real high credit score because you built them up by them getting the history of everything that you did on your cards. Now, you don't want to put them on anything maxed out, right? Keep them off of those. But anything
just
that's
on the good cards.
Yeah, the good cards. Yeah, keep them on the good cards.
The cool thing is my parents did the same for me, and I didn't know about it until I was looking for my first house, because I didn't think about credit at all until then. We're looking at our first house, and turned out I was in the 800s, and I was like, how did this happen? That's when my parents tell me we've been on their cards since when I was little. And they just, the funny thing is they put us on there as authorized users without getting us cards. So we didn't know we had cards to use, which is smart, like you said.
Yeah, that's the way you do it. You just add them on and they just sit there and you just kind of bruise. And that's the best way to do it when you're young, because, to add them on when you're trying to build, you got to purchase them from somebody else if you don't have somebody else to get them from, right? And then they only stay for a couple of months, and then you got to renew them. So it's not a permanent thing when you're purchasing them. That's the thing that, a lot of people may not be aware of. So when you can use families or somebody else who has trade lines available just to be an authorized user, that is a score booster. That will help anybody who's trying to boost the credit score. So I, as I was doing all this and helping people get the loans, one of the things that I really wanted to, I kept running into is people needed their credit repaired, right? And so as much as I was like, I don't want to get into credit repair, it's kind of like it goes hand in hand when you're in lending. You kind of have to be able to offer some sort of credit, or you just basically take those people and you can't help them, right? And I'm not a person I want to help everybody. So I was like, okay, we got to have a solution for this.
You don't want to help just the millionaires.
Exactly. No, it's, if you, and this came true for me, guys, because think about that and I'm just going to be candid here. Like, I went from running that insurance agency, making a lot of money, to then, having to make a change in a moment. And so after a couple of years, your income drops, things start happening, right? So I had some late payments hit my credit, and it dropped my score. Can you imagine that a late payment can drop your score by almost 100 points, like one late payment? So it is that important to make sure that you try not to have that happen, but it did happen to me. And so therefore, now I find myself in a position where my score now is dropped. I now have late payments, and now I have to go through credit repair, right? So I'm like, dang. So I am a perfect testimony of battling all of this. And so I partnered with a company early in 2024. Actually, I was like, okay, I got to get the solution. And so I found Nové. And Nové, I love Nové. It's a credit and money company. And Nové is set up as an affiliate and network marketing company, which is awesome because it lets anybody that's wanting to get into the financial sector the opportunity to get in, learn about it, but then also be able to resell it and start making money right off the bat so you can build a team. So I was like, oh my gosh, this is perfect. It's right up my alley. This is everything I've learned. I love to build teams. I can help people. And there's AI software that we can go in and you can plug into the AI software, and the software will, battle and combat it for you. All you got to do is it does everything for you. All you got to do is just mail the letters. So I was like, perfect. So partner with them. Now with that partnership, that's where I met Benjetta. And I came in with Benjetta, who was a Mother Motivation and is now a partner And her background was in credit repair. She did a lot of credit repair and funding in the 0% interest credit card stacking space. And so that was another, great. I always referred out the credit card stacking. I didn't personally do the credit card stacking. I was always referring that part out. And then I know about it. I know how it works. It's just a different processing. So that was another great connection, right? And then over the summer last year, I was really starting to work on my brand and that's where I met Jeff, the entrepreneur, and really started working with Jeff, and he started helping me build out the brand. And again, you guys, a lot of investment, a lot of personal development. I encourage anybody and everybody to always do that. Thankfully, invited me to go to Cabo, right, which is where I met Amrinder. And Amrinder Cambodge, and with Cambodge Ventures, and then ultimately led me to you, Renji. But that for me, that event was a life-changing event. Like the connections that I met there. I know I talk about this. I feel like I talk about it all the time, but it truly was an event that the quality of people that were there, and the difference in all the different industries, and just the connections were like really very different. But what solidified, this was, when I met Ami, and when I was like, hey, look, we can truly help anybody with credit all the way to funding. And he was like, well, we have this investment platform that you can come in, you can invest the money. Well, you invest it and they get 5% return every single month. And I was like, you got to tell me more about this. I was like, because I'm getting these people funding, and, they don't know what to do with the money, or they're going out. And I was always sending people back to do real estate transactions, which is, awesome. Go buy some real estate. But I got a lady in California who, she's never done real estate before. She doesn't have her own general contracting company. She doesn't know how to go out and purchase properties, but she's got $500,000. What do I tell her to do with that money? Right.
Yeah.
So it was perfect marriage. I call it, for me to be able to get people money and then send it to somebody like, Ami and Renji and everybody over at Cambodge to get them invested. And so that's where we're at today. But to answer your question, Kyle, and I know that was a long circle to get back here, but we truly, like, there's so many different types of lending that's available. And so what a lot of people don't understand and realize is that if you just take the time to sort out the personal credit profile, we can build anybody's personal credit profile to leverage that personal credit and get them business funding. So we can take, anybody off the streets and say, okay, come here, work with us for 6 months to a year, if that's what it takes. Let us build your personal credit profile up. At the same time, we're going to help you get into a corporation. Now, we can start that company brand new, and we help them do that. We'll help start a brand new company, or we can buy an ongoing aged company. Okay, and when you buy an ongoing aged company, that goes back to what I was telling you before, that you can actually, have credibility right off the bat with the banks, because you're not brand new, just starting up, right? So think about the lender. They need to know that they can trust you, right? Yep. So if you're going to a bank and you have a brand new company and you're like, hey, I need $50,000. They're going to look at your brand new company, and they're going to look at your credit profile. That's the only things they have to go off of, because there's no revenue. Yep. They're going to be like, oh, I don't know if I can trust you. Right. Yeah. I don't know if I can trust this person enough that I want to loan them $50,000 of anything. I don't even want to give them a $50,000 card, because there's no proof of the pudding. Right. Mm-hmm. So what you do is you just structure all of that properly before you go to the bank, meaning that we fix that credit profile. We get rid of any negatives, build it up. We start the business. We buy an aged business, okay, like an ongoing 5-year-old company, 10-year-old company, depending on the extent that you want to go with it. And then now we have a nice structured credit profile. We have a 5-year-old company, and we can go and get lending on the offers that are available at 0% interest funding, that are, $25,000, $50,000, $75,000 offers. We do that through multiple different banks. And so we're easily getting $100,000, $200,000 to help people get their businesses started. You take that money, you invest it into an avenue like Cambodge, where you're going to have an automatic return on your money every single month. And then And then your payments are obviously way less than that. And so that's kind of like the strategy that has been the strategy. And so when people just realize that you can leverage your credit if you start a business, that's really all it takes. You don't have to have any revenues. These are no doc generally types of things that we're applying for. Now, again, there's all different levels and all different types of funding. And that's why you need to, when you're getting into the space, you need to speak to somebody who knows everything. I really do recommend that. There's a lot of people who just have a niche in this, or they just have a niche in that, or they just have a niche in that. But, thankfully, I had the right mentors. I've experienced all of it. And so I'm pretty knowledgeable when it comes to all the different types of lending that are available, and can help anybody get anywhere. And if I can't do it, I've got a lot of connections that can.
Yeah. That's one of the things I loved about connecting with you, because I've been being in the real estate space and stuff. I have so many lenders I've worked with. But one thing that you did amazingly was most of them just stick to mortgage or one type of lending. You do everything pretty much. So I don't have to send people to different people for different things. I could just send them to one person that know how to do all of these things, or like you said, have the connection if you can't do something, which is really valuable, because most people can't do all that stuff. So, and guys, going back to something she talked about, you're in the way I see it, let's say you spend some money to buy this aged corp. You're pretty much buying a business from someone else. If you think about it that way, you're buying a business that can produce more income for you. So combining that with Camboge Ventures, because like you said, if you have all this money and you don't invest it somewhere that is producing you money back, now you have all this interest and debt you have to pay back. How are you going to pay that back if you don't have a way to pay it back, right? Because if you do all this to go buy a car or something that's a liability instead of an asset, you just got it yourself into a bigger hole than you were already in, right? Now, if you find something that's producing income and and trust other people that are doing it, take that and put it in there. You're making money back. You can pay the loan off. You can live a lifestyle that you probably didn't even imagine you could. Right? Which is the awesome part about this is you're buying a business that can produce passive income so you don't have to go back to your corporate job that you might not like. Right? That's we love talking about passive income on this podcast, and this is another way to do that.
But by scaling and actually leveraging it though too. We've talked about before how credit and the idea of leverage and positive arbitrage on loans is so worthwhile. And that's how people build real estate empires. Right. But and I know we've talked to people before where it's like, well, real estate isn't truly passive. And it's like, okay, maybe not at the beginning, but what else is passive until, what was it, 6-7 months ago when we did have Imrinder on and we learned about the Camboge Ventures. So if you guys are watching this podcast and kind of curious a little bit more about what we are talking about with Camboge, we did interview the CEO, Imrinder Camboge, about 6 or 7 months ago. And that's on our YouTube podcast. You guys can go check back into those videos as well. But I love how, Amy, you talk about you're getting people these funding. And some of them just didn't have avenues or actually ways to use the funding, which I think could be when I first heard about funding a few years ago, that was my first thought process.
Kyle, you got muted somehow.
Uh-oh. Yeah, can you hear me now?
Yeah.
All right, there we go. Accidentally hit it. So, but now I'm starting to see the full picture like, oh, yeah, you can use this for real estate, or once you find these other opportunities, it can be almost like a no-brainer, right? Yeah. So now, you mentioned a question I had. You mentioned, wanting to build up your personal side to be able to get this business funding. Is it always required that they will look at the individual as like the owner and look at their credit before they do any business lending, even if you do have a 5 or 10-year-old company? Is that correct?
Yes. I mean, yes, for the most part, yes. Okay. However, the other answer is there is no, okay, so that's called a personal guarantee. There is no PG type of lending out there. When you can get into corporate bonds and things like that, which I can also help with as well. Corporate bonds are, when you're raising funds They don't generally look for credit. They're going to look more like at your experience and the age of your company and things like that. And there are some ways that, yes, you can get lending without having personal credit. But for the most part, if you want to have, even on your corp, you want to have if your corporation is built enough, let's say you have a 10-year-old company and you've got lots of financials, you've got it really built out, then yeah, you can get by a lot more without having personal credit. But that's going to be, a lot of building that company, really truly building it before you're going to get there. Because you can take a company, like, let's say we bought a 10-year-old company, we go ahead, we stack it full of trade lines, which will take some time. And then we build it, and then we take some cash flowing assets and attach it to that company also. So let's say maybe that's real estate that's developed real estate that's already producing income, or maybe it's a car wash or a laundromat or all these cash producing assets. You can take those and you can make your company, make those companies, your holding company, the one that you're building is the owner of all those cash flowing assets. So you're making that corporation worth millions of dollars now because it's got all these assets underneath it that are cash flowing that are worth $1 million in themselves each, right? So now you have all this asset. Or if you have real estate, let's say that you used business credit to buy the real estate instead of getting a real estate loan on it. Okay, this is another piece of gold nugget for everybody. You take that real estate and you use business credit or business capital to buy the real estate instead of doing a real estate loan on it. You technically have that real estate free and clear because business loans are not putting a lien against the property. So the property, you've owned it by buying using credit cards or whatever. Now you have these free and clear real estate assets that you can place underneath your companies that are now also going to make the value of that company a lot higher. So now you go to the bank and you've got all these real estate assets that can be used for you to get, the higher loans and the millions of dollars and more business funding because you have real estates available that can be used as assets. Once you get to that level, then no PG is going to be required, or if we look outside the box and go to bond. But getting started, in our day and age, like typically, yes, you need to have that person. It always starts with a personal credit profile. And we, partnered with Benjetta, and then obviously we partnered with Amrinder. So we formed Camboge Capital Solutions, actually new this year. And so the three of us have really come together to be able to provide solutions for everybody when it comes to credit, money, and investing. And so I am very thankful that this all kind of came around and that we have the partnership, but credit is definitely very important. And so we have the team to help with that. And then we have the team to help with the funding, and we have the team to help with the investing. And so we really do it all. But yes, to answer your question, Kyle, I strongly encourage everybody to just take. It's a process, but the process can be much easier when you work with a team like us who will just do it for you.
Sure, absolutely. Paying for that mentorship, right? It all comes
Exactly.
Full circle.
Yeah, exactly. It's not free. You gotta,
yeah, absolutely.
Which it's kind of funny to me how some people, they're like, "You mean it costs money?" Well, yes, yeah, it's really not that expensive. For free. Yeah, I'm like, we literally had somebody say that the other day. I was like, what?
Well, you know what's funny? Well, you have an insurance background, so I'm sure you get it. Back when you were selling insurance, did people ever ask you, if it was free to meet with you? And it's like, yeah, we get compensated by the insurance company, so you don't have to pay us. But yes, in the world of business and mentorship, just the knowledge and the steps, the potholes that can help you avoid to get to your end destination so much quicker. It's like you might as well learn from somebody that's already been there, done that, especially a professional that's helping other people do it, so don't go at it alone, just like anything else in life, And so do you recommend people then have, if they already have an existing LLC, to go out and get a second or third one? Because we've seen and talked to people that have, LLC structures and they've got 7, 10, 15, 20 LLCs. Is this kind of the same setup in the idea then, if you want to have a separate business entity, you start a whole new business basically?
Absolutely. Yeah, you can. Yeah. And it really just depends on where they're at with what they're doing, right? I mean, You can get a brand new company funded at the banks. You absolutely can. So even if you started a brand new LLC, and if your credit profile is strong enough, we can take the brand new LLC and get it funded. You're just not going to see as high as approvals as what you would if we had an aged company. So what strategies that we've done for a lot of folks is even if they have a new company or a 1-year-old company or a 2-year-old company, maybe they haven't done anything with that company, but they've got it, they have it, they own it. We can still help them purchase an aged company to have that age, to show age or history. So we purchase a 5-year-old company. By purchasing the 5-year-old company, we're going to go and we're going to hit what we call the banks that we know will give higher approvals first. So we're going to use, and it's all strategized, you guys. And you can go out right now, everybody on this, you can go and you guys can apply at whatever bank you want and you can get approved. But unless you understand the strategy behind actually knowing which banks pull from what bureaus, the order that you should do it to make sure that you can get this funding and the amounts that we're talking about, you have to strategically have a plan put in place. So that's what we do for each individual person. As we know, okay, based off, this is the banks that you have right now. This is your profile. These are the bureaus that they run from. Okay, this is the strategy we're going to run for you. And then we take that age corporation and we're going to run through the first banks first. In between each round of funding, we're actually, removing inquiries and doing whatever it takes to, these are all strategies for just the people to know, really. We don't want to, we don't really tell the banks what we're doing all the time, but they've caught on, but regardless, to answer your question, it's, we would fund the corporation first, the age corporation first, and then we can go behind that after that first round of funding is done, and we can fund the second corporation that's maybe not quite as old with what we call the secondary banks, so that we can get kind of double funding using both companies. And there's so many banks in America that, there's plenty to go around. It's, again, just a strategy to make sure that you're not overlapping, because the banks also know, if you go to Chase and you go and you apply for a card and you get a $75,000 card at one business at Chase, and then you turn around a week later and you apply for your other bank, your other company, they're going to see that you have a card already with your other company, right? So that strategy is not going to work very well. They're going to be like, well, you already have $75,000 with this company. We're not going to give you $75,000 on this company also, when we don't really know the history of what you're doing over here just yet. Mm-hmm. So, being mindful of those types of things, we're very mindful of all that stuff.
Interesting. That makes sense.
And going back to something you talked about having, I think you both hit on having that someone that knows what they're doing to go to. I have tried to do things on my own, and the funny thing is, you'll get hit up by every creditor, every bank, because they know you're looking, and your phone's gonna ring nonstop. And then if your credit goes down, they'll still hit you up. They're like, "Oh, we can get you this." And then as soon as you start fixing your credit, now I'm getting all these calls all the time. They're like, "Will you fix it?" And I get emails, at least one call and email every day, so, but having someone that knows what they're doing to help you navigate through all that, you don't have to get into those traps of, oh, wait, that's not as good as it looks like on paper,
Oh my gosh, I'm so glad that's I'm telling you, lending space is definitely a dog space. There's so many brokers out there that are, a lot of MCA brokers. If you guys don't know what MCA is, I actually started in the space. I started doing MCAs, which are merchant cash advances. And they're fast money and they're pretty easy to obtain as long as you have revenue coming in. Anybody can get an MCA for the most part. But they're it's kind of like doing a payday loan. So they're high interest, they have a factor rate, and they have a short payback time. So you're paying weekly or monthly, you're paying weekly or daily repayments. Mm-hmm. And so but there are literally thousands of brokers that are promoting that all day long. So the moment you get into the system, the one time you apply for anywhere out there and you thought you were applying for one thing, but you applied for another, and you just went online and you put your information in because you're like, let me see what I can get. Oh, 5,000. You just put yourself in and now, and you are a lead. And that lead is sold to all of those brokers. And their job is to go out and fish you and hook you and they're going to hook you with, hey, we've got an offer of $150,000. All we need you to do is fill out this application and send us 3 bank statements, and we'll let you know if you're approved. And now guess what? You just did that, and you got sucked in again to even more. And your credit now might have been ran again. If you actually filled the application out and you went through the submission, now you've got another inquiry on your report that you're like, oh, I didn't know that I was doing that. Mm-hmm. And car dealerships are even the worst with inquiries. You go to a car dealership and you want to buy a car. Next thing you know, you got 5 inquiries. And you don't have to do it that way. You don't have to do it that way at all. There's banks that will give you a pre-approval with off of 1 inquiry. Inquiries are pretty easy to remove. We can get those off.
And I was going to ask, based on what you guys are talking about, I'm making the assumption that doesn't necessarily happen with you guys. Like, how do you avoid being hit up by, so many different people trying to get you to get funding and lending through them?
Oh, man, it does. Although for me,
it still does. Okay.
Yeah, no, absolutely, it does. Okay. but for me now, because I'm in the space, I turn it on them and be like, okay, are you a direct lender or are you a broker? And then I'll say, okay, and then what kind of, all right, well, I'm interested in because I'm an independent sales organization myself, and I actually help people do lending. So I'm interested in what kind of products you have. Are you a lender or are you a broker? And then they'll usually tell you whether they're a broker or a lender right there. A lot of the people who hit hard are going to be brokers, meaning they're just out there, like all of us, just attached to different banks. So it just depends. But you're still going to, I still get hit up. I personally still get hit up today, every day, because I had loans when I was running my health insurance agency. I still today am in that system. I get offers every single day on my phone saying, we can get you $150,000, payback $160. Does this work for you? Say yes.
No. Oh my goodness.
Yeah.
Something else I wanted to hit on too, like going back to the credit side. So I think, a lot of people are worried about getting business funding and all this stuff. They're like, oh, that's going to affect my credit, all this stuff. Can you talk about the difference between taking, like we just hit on how your personal credit gets hit, but the difference between that and doing stuff on the business side, how it doesn't affect your personal as much? A little bit on that.
Yeah, and I'm glad that you brought that back up, because I meant to say this a little bit ago when Kyle had mentioned something about the thing with this is, people are scared. They're like, oh, I don't want to take on all this debt. I'm like, I don't know about, I don't want to do something different. Credit card debt, what? Or, anything there. That's the mindset. And the mindset is that of a it's like almost a scarcity mindset. Like, oh my gosh, I don't want to take on, I don't want to take on the debt. So the thing is, the reason why we want to structure it, and we recommend structuring it the way that we do, first of all, is when you acquire a whole bunch of personal debt, okay, you go and we get, let's say you just do a round of personal funding, we call it, okay, and you get a bunch of 0% interest offers. You have your personal credit cards, you can use those. You got personal loans, you got everything on your personal side. You are personally responsible for that debt, right? Which means all of your personal assets are tied to you, your house, your cars, your 401, anything that you have that you personally has your name on it and not an EIN from a company becomes liability to all of that debt, right? So you separate that by forming an LLC or forming a corporation, and you separate that stuff. You can even go as far as really, structuring enough and properly to where if you have your trust in place and you put your assets under a trust and you have different companies owning different assets, it goes so deep, and I'm not going to pretend that I get into all of that. I understand it, but I don't do it. Okay. So, but Cambodia Advisories does, and they can help you with that. But my point is that it's definitely a structure. And it's important to make sure that you're properly structuring everything so that you can protect yourself, so you don't have all that personal debt to where any of your assets can be taken. So we structure that purposely, putting them in business, because worst case scenario, you guys, and I hate to say it this way, but if you have all the debt under the business, something happens to that business, it's the business that files bankruptcy, not you personally.
I'm glad you brought that up because that's something we talk about, or I've talked to people about on phone calls, and they're like, I don't want to get onto all this debt and have to file bankruptcy. And then you hear about all these millionaires and billionaires that have filed bankruptcy several times and they still have all this wealth. It's
Yep.
not that they're doing it, they're not doing it on their personal, it's all on the business. If the business files bankruptcy, it still doesn't hurt them personally.
Yeah.
So glad you hit on that a lot.
Yep. Yeah.
I had oh man, there was just a question I was gonna ask, but I lost it. Oh yeah, I did think of two questions. One, you mentioned earlier that you can get like 0% loans. Now, is that on all of these, or you just have some opportunities, or like what is typically the loan terms as far as interest rate and like the payback period?
Okay, so I always want to correct this because everybody always says 0% interest loans, and it's not really a loan. It's credit card stacking. Okay, so
Okay.
it's and yes, we can get loans, but loans don't come at 0% interest. Loans are always going to be, so we can do a term loan or a line of credit, which is what we call a bank line of credit, and I call that like cash money, like bank money. Those are going to have your prime rates to it. So you're going to be somewhere between 6% to 9%, depending on where your credit's structured. But you can get a loan with a smaller rate like that. And those are good. Those are stable rates. They're longer terms. When it comes to the 0% interest offers, those are introductory offers that banks offer to folks who have a pristine credit profile. So we purposely structure the credit profile so we can get those offers. So what we do is we'll take the maximum amount of offers that we can get from all the banks that are offering 0%, structuring it, by going through different banks at rounds. Say, okay, we're going to go to this one first, then we're going to, remove it, and then we're going to this one. So what you're getting is 0% interest, 50,000 here, 50,000 there, 25,000 here, 50,000 here, 75,000 there. So it racks up. That's why it's important to have the age corp, because the age of the company, they're not requiring any docs for those. They don't require us to turn in financials. We don't have to have documents. They're going to go based, if your credit profile is strong enough and you have an older corporation, those two things alone are going to be enough for the bank to say, you know what? I'm going to go ahead. I'm going to give you 50K. Now we have relationship managers at the banks, guys. We have inside people that we work with at the banks that also help us, of course, right? So we're always going to connect our clients to a relationship manager that can help them fill out the applications and help them make sure that they can get approved. And so we walk our clients all through all of that. But that's what it is. It's 0% interest cards that are good for, let's say, 12 months, 18 months at 0% interest. So at that point, we'll go and do another round of funding, right? We want to go for another round of funding, whether we do another company or we do just the second round of funding on the first company, and we go for more 0% interest funding. So if there's any balances left, you can then do a balance transfer. You can liquidate the cards. Okay, there's different ways to liquidate cards as well. So let's say you get a $50,000 0% interest card. You can pull all the money off of that card in a couple different ways, and then you can utilize that money for whatever you want. If you want to, pay off some personal debt, you can do balance transfer. Some of them will offer a balance transfer introductory, saying, oh, hey, do a balance transfer and you just pay off one of the cards and it rolls it over to another. They do allow those occasionally. But a lot of times the easiest way is just to liquidate the card and pull the funds off of it. And then now it becomes a 0% interest loan because you loaned the money off of your own card.
Gotcha. All the while you're doing this, I know a lot of these cards have like credit card points. Are you still building those up in the background too? Oh my gosh.
Yes.
I'm like, just in case.
That is the hacks, right? These are the hacks.
Yeah,
so
yeah.
You're building your points, right? And you're getting cash back. So the usually what we're doing, and obviously there's a funding fee. We have a funding fee to do business. That's how we get paid. Is we get paid off for a percentage of everything that gets funded. So even after the funding fee, we help the client structure the funding fee to put it on a cashback card so that they get $3,000, $4,000, $5,000 back on the fee that they just paid for the funding fee that took us to do all the work for them. Mm-hmm. So we really do strategize and work with the clients to help make sure it's the cost advantageous for everybody and it makes sense for everybody the best that we can. So yeah, I mean, there is a cost to doing business. It's a, we charge a funding fee, but it's worth it because you're not, there's nobody that I know, unless they know this strategy, they're in the industry and they know how to do it, that's sitting down, making the relationships that we've made over the years. That's understanding all the banks in the different states, what bureau they pull from, and then know what order to actually apply to make sure that you can get $100,000 or $200,000. Like, it's strategy.
It's funny you mention all that because, like, I've seen so many when interviews with millionaires or billionaires or that are making that kind of money. Whenever they get asked about debt, they're like, "Oh, we borrow from wherever we can get. I don't care what interest rate it is because I know where to put that and make money." This is why the wealthy use the strategy of OPM money, right? Other people's money. You're taking the bank's using your money. Why not use the bank's money, right?
Yeah.
So that's the strategy that they're using, and they know where to plug that money in to make so much more money back that the interest that they're paying is nothing. Even if you had to pay a ridiculous 30%, which is really, there are some credit cards I've seen that have that.
Oh, yeah.
Even if you're paying 30%, but you're making 40% return, you still profited 10%.
Yeah, and I break down that math for the clients. Actually, I'll be like, look, even if you have an interest rate, let's say you don't get a 0% interest. Let's say you do have an interest. Let's say you do have an interest rate. It's still, first of all, and especially with the Cambos, 5% model, like, it doesn't matter what your interest rate is. You're still going to make money on the money because, obviously if you can get 0%, that's better. But even if you can't, like I broke down the numbers several times, your payments are way less than what you're going to be making every month. And it's just a no-brainer to me. Like, that's why for me, it was an amazing partnership to be able to help all the people that I'm helping. And that was the one thing that was missing was the investment side. What is a good place that I can have them plug in this money to make sure that they're getting a return? And real estate was a good one. But again, real estate's also, that's a whole beast in itself. So if you don't understand real estate or the market, that's a whole other job you just brought on, which is great. But it's just so much easier to have a platform like Amrinder put together for everybody. I've just, I think it's, very wise what he did. And, I'm actually very thankful and honored to be able to, send people there.
Yeah. And like you said, if real estate's a whole nother beast. So if they don't know what they're doing, they can get into so much more trouble on that side too.
Oh my gosh. I can tell you, oh my gosh, I got stories on that too, of people just jumping into it and they have really no idea what they're doing. And, but they're like, no, let's just do it. And then next thing you know, they're trying to buy all these properties. Oh, I have to have a down payment. Well, yeah, you need a down payment. Wait, why is it so high? Well, you're doing a DSCR loan, you're doing a rental loan. It's a minimum of 20% down, but if the rents don't come in right, it's going to be 30% down, and that could change right at the end, right before closing. So you might want to expect to have 150,000 instead of 100,000. Like, those situations happen, and then they buy the property, and they're like, "Oh my gosh, this needs $50,000 more worth of work than what I planned on. My scope didn't even cover all of this." And now they're like in over their head. They paid more for the property than they thought they should have. And they got to put more money into it. And then the rents came in lower than what they expected. I mean, there's a lot of things that can happen with real estate as well. So
these are all mistakes we made. Actually, that's why I was mentioning that, because when we got into real estate back in 2017, we used a bunch of these unconventional loans to get into it. And then we had issues with the properties and all this stuff, but we thankfully stuck with it. Those properties are worth way more now than when we bought them. But that's something that a lot of people don't. I mean, most people don't know about it. I didn't know about it, So, but having something like Cambo Ventures is so much easier because you don't have to do any of that stuff. You're partnering with a business that's already provided the structure for you to make money from the start, and you're getting 5% per month. That's something that people don't think about, and if your loan is 20%, you're getting 5% per month, a 60% return in a year, minus the 20, it's crazy that these things are out there, which, it's funny. As I talk to more and more wealthy people, I realize there's more and more crazy opportunities out there that this is why the wealthy stay wealthy. It's not that there's a lot of people, when you hear about it, I mean, I thought most of these opportunities were scams when I first heard about them. But
That's the thing. That's the mindset thing. Yeah.
Exactly. Yeah, it was a lot of mindset stuff, but that's why the wealthy stay wealthy, because they have opportunities that regular people can't get into, and that's why they stay wealthy. There's stuff out there that are ridiculous, So it's just a matter of knowing who you know and trusting if you build that trust, what they're telling you is real, and it's just you have to figure it out yourself. You can tell people what is that phrase? You can lead a horse to the water, but not make it drink, right?
Mm-hmm.
You can tell them whatever you want, but at the end of the day, if they don't take action themselves, no one else can build that trust with you other than you're doing it yourself, right? Something that we like to ask everyone. Was there something you were going to go into, Amy?
No, I was just saying exactly. I'm agreeing with you.
Oh, okay. No problem. Well, it's something that we ask a lot of people is, what is one of the best advice and what is one of the worst advice that you've ever gotten from a mentor or anybody?
The best advice that I would say the best advice that I've ever got would be, is, really spend time pouring into yourself, and invest in the things that are going to help make you better. Obviously, seek out God for sure. That was one thing that, I definitely did a lot of searching throughout my time here, and thankful for God, and, wouldn't be where I'm at today without him. So those are some of the, the best things. And I would say probably the actual, and at the same time, the worst advice, which created the best advice, was a mentor saying, pour everything you have into everybody else. And that was literally like, I'm giving everything back that I had, everything to everybody else, everything. And I wasn't taking that time to take what I had earned and what I had done and put it into wealth building assets like I should have done. Like I should have been focusing on myself, and I should have, not really just myself, but you got to be, I'm not a selfish person at all. Like I give everybody everything before, so that, like, when it came back around, it was like, no, focus on, you gotta pay yourself first. You got to take care of yourself first. That is a real important thing. And so that is the best advice and the worst advice at the same time, because it was first, no, just take everything you got, because you're going to give it all back to them and it's going to come back to you, which is true. But it was true to a matter of, like, I still needed to take that portion and put it back for myself. And I didn't do that. So that whole time that I'm running this insurance agency and making millions of dollars, I was taking all of it and putting it back into the team, all of it back to the team, giving it to them, instead of taking that and actually putting it into something for myself. And so that was probably, and so after I, caught on, then I was like, somebody else was like, no, you got to do it like this. And I was like, okay, makes sense. So obviously shifted my mindset on that, and I still want to help everybody else, and I still want to give them everything, but at the same time, you've got to take that and make sure you're taking care of yourself first, and making sure that you're in line before you can really help somebody else.
Yeah.
Mindset. It always comes back to mindset, doesn't it, Renji?
Yeah. And you got to be able to help others. You have to. I mean, part of it, I think I had to learn the same thing too, because we always would get into trouble because we're giving too much or whatever. Exactly. But you have to be able to set yourself up, because you're teaching others what to do. If you're not doing it yourself, you're not being an example, first off. But if something happens, you don't have anything for yourself. So if you can't get yourself set up the right way, how are you going to help others to set up the right way? So that's a great point. I think we all had to learn that the hard way.
Yeah.
Absolutely. And with that, Amy, any last bits of wisdom that you want to leave our viewers with today? Anything else that you felt that you could have added or you wanted to say to wrap us up for today? And then if not, make sure you end your answer with where our listeners can find you on social media, because we definitely want to get them connected with you so that you can help them build wealth as well.
I appreciate that. I think you guys really, asked a lot of really great questions, and I feel like I talked a lot. So hopefully, it wasn't, too much information, and definitely helped somebody.
You're supposed to talk a lot. That's why we brought you on. We don't know this stuff. We need you here.
Well,
But no,
perfect.
go ahead.
Words of wisdom, definitely, find yourself somebody who can help you. There's always, I one of my biggest prayers every day is to bring the people who need me and help me find the people that I need, because I know God knows that I need help, and I know others need my help. And so I'm always looking for, that type of solution. And so, who can I help today? And then who needs my help? And so I would just say, open your mindset, look at something different, get into some books, self-development, read something, ask if you're not sure where to start, get with, anybody right here on this call and just ask. And you can find me on Instagram. A-Team Amy is my username. And also on Facebook, Amy Mauk, and then on TikTok, if we get to keep it. And that's ateam.amy. And so A-Team Amy is actually really kind of where I branded a long time ago, starting the insurance company, and I've just stuck with it. And you can also find me, titaniumcapitalsolutions.com.
Awesome. Perfect. Amy, thank you so much again for coming on. If you guys made it to the end of this podcast episode and you're not already following or subscribed to us, because this is YouTube, make sure you click the subscribe button below and leave your comments below as well. Thank you, Amy, for dropping all this knowledge and wisdom and coming onto our podcast. And with that, we'll see you guys on the next episode. Take care.